What's going on, guys? What's going on? Excuse me. Whew. This change of weather. It's got me a little dried up. Happy Sunday, everybody. Thanks for joining here. I'm going to give about a minute or two to get started. Would like maybe a couple hundred folks to join in, and we'll get things going. Pretty excited. We did an awesome session last Sunday. So hopefully going to continue on the momentum of that session, and we'll get you out of here maybe 35 minutes. No Q&A today. Probably we'll keep that for another session. Going to break down week coming up as well as the last week. I know it's football today, so obviously I'm going to get you guys out of here 2 to 2:30, 2:45 max. So bear with me. Get your pen and paper ready because it's going to be a lot of levels and gaps and a ton of learning. And this is probably arguably the biggest week of the year for earnings in standpoint, as well as obviously we've had a ton of CPI stuff recently and everything's been pretty volatile. So earnings are going to be the picture this week, and it is an absolute full slate of earnings. I'm going to walk through all that. Because there's a lot going on. We got consumer staples, you got mega tech, you got oil and gas, you got energy. I mean, you got everything, and we're going to see really which way this economy really wants to run. So we'll see what happens with the markets, but I'm going to break down because all we have to do is trade charts. So based on good or bad reports, that's what I'm going to be using, gaps, and that's how I'll be making my trades this week. What's going on, Jay Currency, Chris Parker, Dr. Squatch, New Begin, Lollipop, Paul, Warthog, Mason? What's going on, guys? I'm really happy everyone's already joining in here. We already got 50 people in the first minute, so that's great. Happy these sessions have been helping the last couple of weeks. I'm going to keep doing them until doing them until I guess people say otherwise. So we've gotten awesome feedback from them, so we're just going to keep going. I'll get started here in about 30 seconds, and I'll do my quick intro, and then we'll jump right in. Awesome, guys. Thanks a lot. Okay. We're going to get started just a second, guys. And we will get started. Give me 2 seconds, guys. Just making sure everyone can join. It's a free session, so I'll make sure everyone can join. And we'll jump right into it. Okay. What do we got? 55. Okay, awesome. Gilby, I'm good, thanks. Yes, this will be recorded. You'll be able to run back as all my YouTube videos. You can always scroll back, see the slates. This will be recorded, yes. Awesome. So, guys, I'm just going to kind of jump into it. So, really this week is, as I mentioned, a full slate of earnings. For those of you joining in from Webull, StockTwits, or any other Twitter, social, YouTube, anywhere, thanks for joining. My name's Spud. I run Spud Zone Discord. A bunch of awesome trading folks and great community. You can see within the bio itself, that's where all my real-time sort of plays, charting, analysis, TA, everything is all happens within the Discord. You can see what I'm trading, what I'm swinging, what I'm looking to trade, how I'm looking to buy the fear, maybe sell the rips, as well as short. So it's a really volatile market, so it's really tough to overnight things. So a lot of day trades have been mostly pretty profitable for a lot of folks. So you can obviously check the channels. I do post a lot of some of the alerts and stuff and free in real time as well, as best as I can. But Discord's the best place to follow, so I highly recommend that. You can check us out there. I do not trade for fun. I trade specifically for my own, my own going. So that's what it is. Trade for myself, and I'm just posting my ideas and where I think things may go based on technical analysis. So feel free to check me out. You can see all those social media channels, or as I said, you can follow us on Discord. Awesome. So I'm going to jump into it here, guys. We have an awesome week coming up. I'm pretty excited. Also a little bit nervous because these are really heavily weighted companies that are reporting this week, and if things do, as I like to say, shit the bed here, we could really see a downside. But as I said, earnings have been pretty good. I just don't think we're there yet to really see that full downside leg. I don't know if we're going to really see that till 2023, and I'm still pretty bullish on that thesis. Pretty confident on that thesis that it just everyone has a job, everyone's making money, so much money supply out there. There's so much spending still. I don't see the recession out there in the large cities that I've visited, and just not seeing it. And so until I really see that happen, I have to remain sort of bullish in this earnings reports. And so for a lot of these companies, I'm going to be showing the upside gaps as well as the downside gaps, and I'm pretty excited to walk you guys through that. But we start off with, I want to stay focused here on a Tuesday morning. Big one here, UPS. As you guys know, FedEx, obviously its top competitor, one of the biggest posted carriers. So I think there's potential downside. I'm going to talk through that potential downside risk and the levels you may be wanting to look at as a potential support or maybe a short downside. I think there's some more risk to the downside on this name. Coca-Cola, we saw actually PepsiCo have a blowout unexpected quarter. I think it was last week or the week before, and I think they popped 4 or 5%. So keep an eye on Coca-Cola because maybe these companies are doing really well with inflationary prices and demand still. So Coca-Cola is another one to keep an eye on. Those are Tuesday morning. Those happen before the open. I don't know if I'm going to be taking positions in either of those. Just keep an eye. Tuesday after close, we start with our mega tech. And it's going to be pretty nuts. We got Microsoft after hours. We got Google after hours. Both names pretty beat up in the recent. And then we have Spotify. And this is actually going to be one of my sleeper picks here. And I'm going to talk through this is one of my favorite ones to discuss on this entire chart for the week because of where the chart is. This one and Meta are going to be sort of my two top focuses because of how really beat up some of these names have become. So I'm going to talk through Spotify. That's Tuesday after hours. So I'm going to go through all the charts and gaps shortly, just kind of running you guys through what I'm really going to be watching this week. Then Wednesday after close, we have Meta and ServiceNow. ServiceNow has one of the best CEOs in the world. Bill McDermott ran all of SAP for 10, 20 years. This guy's an absolute beast of a CEO in the mega tech world. Very well named, runs really great companies. ServiceNow is a really big growth company doing awesome work. And this name has also fallen off a cliff. That's starting to become a little bit attractive. So I am going to be seeing what he has to say about sort of the future and how he might be cutting costs and doing things that way. Meta as well. Going to be looking Meta. Meta is just, the chart is disgusting. We're down to 2018, 17, 16 lows here. Not a single bounce the entire year down, 68, 70%. If there's a quarter where this thing bounces hard, it's got to be this quarter. And so I'm going to be talking through this one. I think there's a very, very, very risky upside trade here. And I think I'm going to be positioned to go in some calls because anything good that comes out of this conference call and this stock could pop 10% in a blink of an eye. It's trading at a 13 PE. It seems like a value trap at this point, a lot of folks are saying, but it could go down much further. Yes, it could also go down a lot further, but we're trading at pretty low levels here. So anything to the upside could be pretty extreme. So I'm going to be watching this name. Then we have a high beta name, Shopify. That's a high beta name. It's done really well over the years, but it just fell off a cliff in the last sort of 6 to 10 months. With Caterpillar and McDonald's before the open on Thursday as well. Then after Thursday, we sort of have all your big boys. You got your Apple and Amazons, and everyone's going to be watching these names. I'm actually going to be staying away from Apple and Amazon on earnings, and I will tell you why I will not be playing either of them. But all in all, this week, I think there's going to be some big moves. You're going to see some 5, 7, 8% ups in a lot of these names, and you're probably going to see the same thing down, 5, 7, 8% down. And I think this week really separates that sort of FANG, really separates that sort of mindset of, okay, I have to have all these big tech in my portfolio going forward. And the reality is I think that this week is a week that investors are going to be really picky and say, what do I want? What do I want to dump? What looks good for the next 6 quarters? And I think you're going to see that, and you're going to see overshoots up, and you're going to see overshoots down. And so that's how I'll be playing this week. Hopefully that helps. So I'm going to walk through some charting exercises here, guys, and we'll get through that. Maybe we'll do some little bit of Q&A stuff, but I'm going to talk through, first off, let's look at the SPY. Last week we jumped on the phone here on call, and we walked through sort of the daily charts and levels, right? And I think we were about in here And I said, we could get a capitulation. Maybe it's a 350. We saw the 350. We actually spiked super hard off 348. It was pretty insane to watch. And that was 6 days ago. So that was that Thursday, Friday of last week, of the week before last week. And then sort of since there, we've bounced. And I want to talk through the key levels on the SPY. So right here, we have a wick to about 380, this top wick. So my first target on the SPY to the upside, if momentum continues into tomorrow morning, which I think it will. I didn't see any breaking news today, so we'll see how futures open up at 6. 380 is going to be my first target on the SPY. And then for a bear market rally, I'm actually looking for this level here, which is about 389, so roughly you could say 390. And 390 is, I think, where you kind of want to be trimming longs. And that's probably where I like to trim a lot of longs. So if you're buying calls in here and trying to sell a multi-day, multi-week rally to 390, it could potentially push all the way up to 4. I think that would be stretchy and really sort of a push. But 390 sort of is that conservative goal. 380, I think you might be able to see this week if we continue, maybe even tomorrow morning at this rate, if futures continue green. And I just think, this is a bear market rally. We could overshoot up here. And then eventually, I do think this bear market rally comes to an end. I don't know when. And I think we blow downside through these lows all the way to my blue line here, which is a double, triple bottom. And this is only the 2020 lows. And that's where I think we actually shoot. I think we get to this level here about 330, 340 zones. And I think that's where we're going to overshoot downside. And that's sort of maybe where your first demand level will be, about 330. I know a lot of technicians are calling for that, and I can see why. And so I think we pop up here, and then we just absolutely fade down until maybe things settle and capitulate in here. I do think we need to capitulate in here. It's too heavy in here. People are still buying. There's not enough selling going on, but everyone's forcing and trying to press shorts. I just think it's not a good idea maybe until we press shorts till we get back to these 390 levels on the SPY. Then we press it through the lows in here. I don't know if that's going to be in 2023. I don't know if that's going to be next week. I don't know if that's going to be tomorrow. But I'm using levels as a possibility of where I want to do exit and enter trade. So right now I'm pretty bullish in the markets. I know I'm maybe the only one who's bullish. Every other guru, furu, technician, and everyone's saying we're just going to fall off a cliff. Guess what, guys? Earnings haven't been falling off a cliff. I know they're low expectations, but everyone's been beating so far for all the names I've been watching. You have IBM, we have big names beating, you have PepsiCo, you've got nothing's falling off a cliff yet. And that's my biggest concern, that everyone's so short and negative going into this earnings print this week that I think you could maybe see some face ripping rallies this week if earnings beat. So keep an eye on that, only because sentiment is so bearish that we could squeeze out some of the retail, could squeeze out some of the large folks on the downside shorts. So let's see how that works out. This is the SPY. But I want to talk through multiple names this week because these are the levels. So if you get a pen and paper, I'm going to sort of walk through the levels. So SPY levels for me, as I mentioned, guys, are 380 this week, possibly 390 to be a multi-day, multi-week gap fill on the SPY. That's where I think you maybe want to take some on the upside risk. Maybe you get a push to 410. That seems very, very unlikely, but I think 390 actually could get hit if things are actually better than expected this week. And that's a short-term bear market rally, guys. And that's what I'm looking and calling for. So we'll see it. We called it perfectly before the entire rally Friday. Everyone was sort of confused. How did you call that? How did you see that? I felt it. I saw it in the tape Thursday, and we sort of just got the nice rally end of day. So that's the SPY levels. I want to talk through specifically earnings. We have Alphabet is UPS is the first name. Sorry, I have a whole list here. UPS is the first name, my guys, I want to speak to. I'm going to look at the daily chart on UPS, okay? So we sort of fell off a cliff here the last maybe 2 weeks with FedEx giving the pre-announcement of just horrific guidance, double horrific guidance, I believe. And so expectations aren't high for UPS, but I am concerned about the guidance going forward. And so that is the reason I think UPS has a downside risk to it. And what I mean by that is I think UPS is trading at around, 165.50 here. I think there's downside risk to this level. And so if I'm drawing a line here, I want to guys show you, right? So back here in 2021, we're not down enough UPS to where it's actually attractive for a long-term buyer to come in. And so right here is sort of where I think we can maybe retest. So 150 to 153 is sort of a region where I think that's where maybe this stock can go this week on earnings. And that's where that's where you might see sort of the selling sort of dry up, maybe see some covering in here. If we break below the 150 mark, that would be really bearish short term for the stock because that's where all the demand zone was. And then if we were to break 150, 130s would be your immediate next target. And that could happen pretty quickly given how fast the gap up was. So 150s to the downside. And I think, as I mentioned, this is a name I think is at risk to the downside. So I don't know if I'm going to play this name because it's down pretty hefty in the last couple of sessions. But as I said, I am concerned about the guidance, not the numbers per se. They could beat, but the guidance could be bad, and this could drop 5%. And this is Tuesday morning. So keep an eye on the IV premiums. If the premiums are not that bad in terms of if they're 100% plus on the IVs, I probably will stay away from it. But if it's not that expensive from a premium risk point on the put side, I might play a few lottos, maybe small on the 150 strike for Friday. We'll see. We'll see. So I'm going to see how the price action looks tomorrow. Maybe we get a run up into earnings. That's UPS. I think there's downside risk to 150. We're at 165. That's about a 10% move on the week. So we'll see. We'll see if the 150, 155 comes in touch. As I said, UPS, I think, has a downside risk to it. We will see if that plays out on Tuesday morning. The next one I want to talk through is Google. I'm going to go show you guys these levels. This is actually a very interesting one. This ran to a 52-week high of 152. Let's just say, let's keep it here in the 140s. It's back down to 100, so it's down 40%. It's consolidating here in this range. As you guys see, my bars and levels already in this range. I think there's actually a small short-term upside gap on Google. And I'm going to talk through the weekly chart on Google because it's sort of like a hammer sort of consolidating. So we're seeing consolidation in Google. And I think if we rip past this 104, I actually think the risk on Google is to the upside at about 108, 110 levels. And I think that we could hit this top and fill this gap. If earnings are good, I think we could fill the 110 gap. Advertisers has been getting absolutely beat up. You saw Snap, but Snap's in its own league. It's a one-dimensional app. Google does it all. Meta does it all. I'm going to be talking through why Google and Meta should not be in the same bucket as Snap. It's just a one-way application, Snap. I don't know why folks compare all these, huge companies compared to Snapchat. That's, as I said, it's a one-stop train. I don't see it. So I think Google actually has upside risk here to a 110 levels. That's at 101. So that would be roughly an 8 to 9% move potentially after earnings. And I wouldn't be surprised if we get a 7 to 10% upside move on Google. So I'm actually predicting maybe Google can see this gap fill to 110. If Google does not report well, I think the downside would be all the way to about $90 to $92 a share. So roughly a 10% direction move in either direction for Google is what I'm predicting. Could be a potential straddle, as I do think this stock's not going to move 2, 3, 4%. I think it's going to move maybe in the 5 to 10% range. So this could be a potential straddle, the 110 strike versus the 90 puts. That would be an interesting potential play if IVs, as well as IVs, are not spiked. Keep an eye on the IVs because that's where you're going to make your bread and butter. So that's Google. Those are your levels: 110 on the upside, 192 on the downside. As I said, I'm leaning towards bullish short term to fill that 110 gap. That is Google. Keep notes on Google. Now I'm going to walk into my two favorite ones for the week: Spotify. As many know, Spotify is sort of that leader in the sort of music podcasts. I don't know if you guys use Spotify. I've used Spotify for 5 years. I've never used anything else for music. I've never even thought about canceling my subscription. That's me. Maybe it sounds a little bit biased. So I love the application. It's super easy to use. Search a song, it's on. You can do it to Sonos. You can move it anywhere. It's just such an easy, awesome interface to use. And I know there's probably a ton of people out there that use Spotify and would never cancel it because it's sort of that like, this is the only place I can listen to music. You have YouTube, you have Apple Music, you have other areas, but for me, Spotify just does it all. I create my own playlist. It's just super simple, and it's kind of a cult for me. I just would never switch because I don't want to learn how to use something else, if that makes sense. From a stock market perspective on Spotify, we're actually below Spotify's IPO levels all the way back in 2018-19 levels. 2018-19 Spotify IPO'd at around, let's put that bar in here. This is a very interesting one, guys. Spotify IPO'd at around 142 a share. We're actually down into the 80s now. So we're down like 50, 60% from there. This thing ran all the way to the 300s. This is another name where I think it's actually so beat up here. They do 2 to 3 billion revs a quarter. If revenues come in expected and maybe user growth stays the same or even increases here, this could be at risk for a 10, 15% popper this week. It's so beat up chart-wise. I don't even have a chart, guys, to look at this. I don't even have a chart from nothing before 2018 to show you where this can go. Technically, it's in a huge bearish downtrend, but I actually think there's upside risk on this name to the $100 share price. Now, that's a drastic move. That's a 15% move, 10, 15% move on earnings. So this is a name I might be looking to take November $100 calls. November. Very small lotto calls, because if they do beat and the IVs are low and cheap for November, this is a name you might be able to pick up 100, 200% move if this stock actually moves in that direction. And so I think it's pretty cheap, and I would actually be more compelled to risk to the upside here on Spotify. The chart is extremely beat up. Anything positive, and it can move higher. The only thing about this name that has a bad rep is the margins aren't great yet. They're still trying to be profitable. And it's a little bit of a high beta name, but I think it's come down so much in terms of a high beta. I mean, look at this daily chart. It's pretty disgusting. I mean, I don't even have a chart for it. It's just 104 broke, and we're at $88. I think $100 upside's not anything crazy. I actually wouldn't even be surprised if this ran the like 105, 110 zones, even maybe 120 zones if earnings were really good. So there's a lot of upside potential on this name, I think. Unless they fall off a cliff on earnings, there is no downside gap. So I guess it could be called a free fall. So I don't really know in the downside where I would target. I'd probably just stay away from it because there is no chart to see. But the upside charts are 100 and then your 110 zones. So this might be a name I'm looking at November calls if they're cheap, and I'll be looking at these maybe on Tuesday. And that Spotify reports, they report on Tuesday afternoon with Google and Microsoft. So Google and Spotify are my two Tuesday afternoon watches. Then we go actually into Wednesday, where it gets a little crazy as well. Not as much crazy, but Meta. This is a name you guys have been seeing me alerting. I've been actually playing Meta the last 2 weeks and been pretty lucrative for me. I've just been trading up and down on it, honestly, and it's been really easy to trade, and it's had pretty good range intraday, 2, 3, 4% moves. Friday, we saw about a 3% move to the upside off of the 4% bottoms. You can see this big green candle here on Meta. I'm going to zoom out on it. And this name sort of just, if you see it, it filled all the way down this gap, and then it refilled up. And look at that green bar. Do you guys see this green bar on Meta? That's a huge green bar. That's bigger than the last 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 15. It's larger than the last 15 to maybe actually almost 30 days here. No, like 40 days here. It's the largest green bar we've seen in 40 days. To me, that says, okay, maybe this was actually finally soaked. So keep an eye on Meta. That green bar is pretty big. That's a big filler. A lot of people wanted in on that dip today on Friday. This could continuate much higher. I mean, my first target on Meta is 140. If we break 140, I think there's gaps to about 155 to be filled. So I think Meta, another name that is just down so much. I mean, let's go get the weekly chart on Meta, guys. I mean, I already have the bar set up because I'm pre-planned. I already did a pre-planning here. We're at this low here in 2019, and then we're also at a triple bottom support in 2017. That's a 5-6 year low with no bounce. So from a chart TA perspective, the bounce could be to 140, 155 zones before maybe going lower, or it has a weekly gap fill back to 160s. So keep an eye on this name. And this is Wednesday after hours. I will be swinging some lotto calls to the upside, because if any type of positivity comes from this name, you're going to see probably a 5 to 15% move. There was a couple earnings reports ago. This thing ran 16% after on its news on an earnings beat. So, there's potential here. And why I love the name is they own Instagram. Everyone's on Instagram, millennials, old people, whatever it is. Everyone's on Instagram. They're clicking ads. It's a lot of clickbait. It's a lot of posting. People use Instagram for all these weddings. Like, everyone's still on the application. They own Facebook, which is more the older, sort of dying out population in terms of the not the people themselves, the actual application. So that's sort of like, that's sort of their, I think, risk off is the Facebook. They need to figure that out. But they also own WhatsApp. That was a great acquisition. They own WhatsApp. And if people don't know WhatsApp, that's basically a huge thing in Europe. All the Europeans, that's their main messaging source. So it's like our iMessage or our text messages here. Like everyone's using WhatsApp over there. It's big in Europe. It's big in sort of all those surrounding countries abroad. So like, if they can learn how to monetize that app, I think there's huge application here. And then the big downfall right now for Meta is why investors don't like it and why the chart is so ugly is because of how much money they're spending on the metaverse that has no proven out concept. And people don't like that because they think they're throwing sort of good cash at bad. And so if you get any sort of, we're going to start bringing back our metaverse spending. We're still going to focus on metaverse, but maybe we say we're going to spend 30, 40% less on metaverse, I think you'd probably get a nice pop in the stock because this company is super cash heavy. I think they got over like $160 billion on hand at cash. I mean, this is a cash cow. They're trading at a 13p, as I said. So as I mentioned, any positivity, this could be electric to the upside. It's a heavily shorted name. As I said, we're at a triple bottom on the chart. If we go much lower, maybe we see 113s, maybe 110. And at that level, you just have to close your eyes and probably buy some long calls if this hits 110 on Wednesday after earnings. I'd be a buyer right here because guess what, guys? We go back to their IPO in 2012, 13. This IPO'd at like $35, $37 a share. I mean, at that point, at $100, they've been blowing out estimates all the way through. This would be almost a 70% retracement. I think that would be a really good opportunity to get in for the long term at the 110 level. So if this dies out on earnings, I'll probably be a long buyer. It could be a long-term portfolio ad. As well as I think this could be a good play for earnings to the upside. I like the November calls. The premiums are really spiked for this Friday. There's not too much opportunity there, but I like the 150 November 18 calls, and I've been swinging them. I'm up 37% on those. I added those to Friday on the dip. I may add more depending on price action tomorrow. That is Meta. I think there's some upside risk to this name. The levels on Meta here, if we go back to the daily chart, as I said, are 140 and then 155. Those would be my two targets to the upside. If 140 breaks, you target 150s. If 130s breaks, you target 140. So that's how I'd play Meta. That's Wednesday afternoon. I think there's potential risk to the upside on this name after earnings. I have two more names. Intel. This is one that is absolutely thrown in the, I don't even know what you want to talk, shitter, the ocean, down to the bottom of the sea. You want to burn it in a dumpster, whatever it is. I can't even find a chart for this. I'm just going to go for the monthly, and I'm going to look back to maybe the 1900s because this is just absolutely, it's disgusting. It's been absolutely decimated. If you invested in this stock, Intel, which is probably one of the leader in chips, let's say you bought in 2001 at, 20, let's put it in a line here, just to show you like how dead money this has been. $25. You're basically even money if you bought this 21 years ago. You haven't made a dime. You're basically even. That's how disgusting this stock has been. But it's starting to get levels where it's becoming so cheap to ignore, if that makes sense. I think there's actually potential risk to the upside on this trade, given how beat up the stock name has been. I do think this is a name where an activist maybe can come in and say, you know what, this company has been so trash for a decade or two. Let's try and fix this up. It could be the world's leading chip player. Like, it's just there. And they have so much opportunity, but management just can't find a way to do anything on this name. And the stock price is showing it. So it could be more, you might get some more dead money out. I think this is a great buy at $20 to $22 a share for a trade back up to $25, $30. I do think 29 is an upside risk here to fill this gap. And I'm going to go back to the weekly gap because I think that's where you probably want to look at. I think the risk would be to $29 on earnings. And this thing's at 27. So maybe a 10% move to the upside. If earnings continue to be bad and chips are really under pressure, which I totally understand, they give another shit guidance, I think you might get a capitulation down to 22, 23. And that's maybe where you'd want to maybe take a stab at it. That would be around 215, 2014 lows, maybe 2013 if we get that low. So that would be a 7-8 year low. Everyone who bought over the last 7 or 8 years are now red. So you have to think about it in that sense, right? Every investor who's bought Intel over 7 to 8 years it might be red if this this goes red on earnings, right? So that's how I like to look at things. If I'm getting cheaper entries than the last 7 years combined of people, that's how I look at stock trading, because that I know that like that means either people are going to dollar cost average in, they're going to take losses and get the hell out of the stock. There's just a lot of opportunity when you start to get to multi-year lows. And that's where people like to come in and say things are really cheap. I think it's worth a long-term look. So keep an eye on Intel. That's going to be a big earnings report. That is on Thursday. We also have Amazon and Apple. I'm not going to touch Amazon or Apple for multiple reasons. I'm going to talk through why I'm not going to touch these names, because of two reasons. One, Amazon and Apple are superly heavily weighted to the indexes, where they kind of control the pace of up and down within the indexes. One, I'm not going to touch Amazon because I'm calling this no man's land. It's in a no man's chart land. And what I mean by that is it's got a little risk to the upside to the 120s, but it also has a huge downside risk on the chart to the 85s, 88 zones. And so I just don't want to be in the middle playing this, because for me, Amazon was at like 165, 170. It just hasn't come down maybe enough for me to be like, this is such a great buy here. If this gets to the 80s, 90s, that's probably when I'd like to get into Amazon. I think that's a really good buy there. Right now, I don't want to jump in. They could beat and have a nice 5-10% move. I don't know, as I said. But for me, the chart doesn't tell me like what I should do up or down right now. I call it the no man's land play. And so for that reason, I want to be sitting and not playing this name. Maybe I'll play it after the report comes out. For Apple, similar thing. This is the Wall Street sweetheart. This is the Wall Street darling. No one messes with Apple. As everyone says it, you've heard everyone say, you've heard Kramer say it, you've heard everyone say it. Don't trade Apple, just hold Apple. And that's been what people have been saying for a decade. So I don't know when this name actually decides, you know what, it's not a hold anymore. Let's take some exposure out of Apple. Warren Buffett owns a crap ton of Apple. Every hedge fund in the world owns Apple. Every Saudi Arabia firm, everyone owns Apple. Everyone owns Apple. Every index fund, every mutual fund, they all have Apple. So Apple controls the spider. Apple controls the spy. So if this is going to be a really big earnings report for the economy, because it's going to tell you what the high-end consumer wants to do with their money. And so this is going to be a really big earnings report for Apple. I don't think they're going to fall off a cliff, but I do think they need to give some type of guidance revision. I just feel like they have to, since everyone else is doing it. And if they don't, that will be a little weird to me. And I don't think I'll actually believe that. So if this stock pops 5-10% on earnings and gets a little multi-day run, the upside potential move on Apple could be to the 150s, 160s. If we were to get there, I would immediately reshort. And I'd probably buy multi-puts out, because I think we will test those 130 lows again. For the downside risk on Apple, I see potential move to the 120s. Long-term portfolio ads on Apple, I would like them around the low hundreds. So like 115 to 120 is an area I'd probably like to stab at Apple. Maybe even 110, 105 zones if we ever were to get there. It's such a strong name with price action in the US market that I don't know if you'll ever get there, because people buy every little dip. If there's a half a point dip on Apple, people take it. It's really crazy. It's not like a Tesla or Google or Amazon that like actually loses 3, 4, 5% a day. Apple just rarely drops, and there's just not enough selling in this name because every buyer wants in. So until things change with that aspect of the stock, I won't touch it. And so for another reason, I don't want to play Apple into earnings. As I said, we're sort of in no man's land. It has not dropped enough. It's really outperformed the entire market over the year. I mean, we're basically still sitting around not all-time highs, but highs on the year, like the 130s, 140s, 150s. I consider that just where Apple is. So until that gets to the low hundreds, below 130, I just don't see a reason to play this name. I mean, how much upside can this name have? Is this name going to go to all-time highs this year? I just don't see it. And if I do see it, I would probably like to come in short, because I just don't think they're going to be able to sell as many phones as people think they're going to sell. So that's a name I think to keep an eye on, just to understand where the markets may go. The spiders, the SPY, the QQQs. But this is not a name I'd want to play during earnings. So Apple and Amazon, I will be staying away from. And then we have Friday earnings. We have Exxon and Chevron, energy and oil gas plays. Keep an eye on those names. Those names have outperformed the market to a max. Probably one of the best investments you could have made so far in the year, as well as trading wise. That is ticker CVX Chevron. They're basically at all-time highs. And then you have Exxon, which is XOM, ticker XOM. You have Exxon, that is at all-time highs currently. So these names, I don't know how much more upside they have. This is definitely a little bit of short-term of a squeeze going on here. But keep an eye on crude. If crude continues higher, these names are going to continue higher. Their cash flows are really heavy. So there's a lot of really good things going on with these names. And there's been no selling on these names. It's only been inflows really if you look at the charts. So those, keep an eye on the earnings. Those are Friday. I also will not be playing those names because it's not my cup of tea. I'm not a commodities guy. I follow the commodities from a trading and equity standpoint, but I actually don't trade the commodities or play commodities themselves. So I just watch them from a standpoint of where equities markets may be going and where the indexes may be going. So I'm not going to be playing these names. So as I'm going to refresh, because I kind of went through a lot, guys. The names I really like to watch and focus on for the week: Spotify, which is on Tuesday. After hours, Spotify, SPOT. I'm looking for a possible upside beat there. So I like November calls because of how beat up the chart is and how I think there could be a bottom feed risk to the upside. I also like Meta. Everyone's going to tell you I think Meta's going much lower. It's at a 13 PE currently. If they say any bit positive on the conference call, just anything, they could say anything positive, and I think investors would be so happy just for a little positive, anything positive, when you could see a 5 to 10 or even bigger percent jump in Meta. Those are my two favorites to watch and trade this week, Spotify and Meta. I think you're going to have a lot of range percentage on both in shares as well as options. And then, as I said, I also keep an eye as a focus for the broader markets on Intel, Amazon, and Apple, those three. And then the downside risk, if you're a short and you're looking and watching this video now, if you're looking to short, as I said, I think UPS may fill that gap down to the 150, 155. I think there's downside risk of 5 to 10% after earnings on this name as well. Only because it's still above its 2021 highs. And I think this name needs to come down more and to be more attractive for investors. And I think it provides an awesome opportunity to potentially be short into the holiday season if we see less demand and less spending power from a buyer perspective. So that's UPS. So UPS for downside risk. I like Google, Spotify, Meta for upside risk. And yeah, guys, that's this week. It's going to be action-packed. It's going to be volatile. It's going to be crazy. But as I always say and teach to everyone, we follow the price action in the markets. When you see 95% of the world saying the world's ending, we're going down, sometimes that actually may not be true, and the price action will tell you otherwise. On Friday, I saw a lot of people on social media trying to hammer shorts and wrecking their accounts. And they were trying to buy puts, and they kept smashing and pressing and pressing and pressing. And all we saw was new highs of the day on the 5, 10, 15-minute candles. I play price action. I don't care what sentiment is in the market. If the price action's telling me what's happening in the movie, that's what's happening in the movie. That's what I play, what's in the movie. So that's how I trade. So this week, if we're seeing beats on earnings and things are gapping up, I'm going to play upside. I'm going to squeeze out some shorts. I'm going to play that upside move. As I said, the levels on the indexes, I'm going to go back one more time to show you guys. Spider, if we see the SPY, these are the areas, the levels you want to be scaling out. These are the levels I want to be scaling out. 380 is a first spot. 380 is a first target on the SPY. This be the top of the wick when we made that huge move and then got sold off intraday. We're about to probably retest that maybe tomorrow or the following day. As I said, the next level on the Spider would be 390. Let me go back to the daily. Sorry, this is the weekly. So the first level, right, would be 380. It would be a triple top. Once we break out of this 380, that would be a 3 retest. I call that the 3 retest push. Once I think we break a 3 retest push at 380, I think the next level for this would be 390 with the top of this wick. That is where I want to be scaling out, 390. Maybe you want to scale some out at 380 this week, and then maybe if we get to 390, that's really where I'd say I'm trimming some longs, and I want to maybe position myself for a breakdown of 390 to blow through these lows and finally maybe capitulate to 330s. I don't know. As I said, is that going to be tomorrow? Is that going to be next week? Or is that going to be in 2023? I don't know. But as I said, we do have midterms elections coming up. We could see a prop up in the markets. We've seen this before over the last couple of decades. We've seen how price action works. So don't fight it. Just follow the price action. Make your trades. Don't be emotional. Use these technicals, use your charts, follow me, use these, when I make these posts, I'm showing you guys charts of what's happening. Charts can't lie. People can lie. Everyone else can lie. Charts cannot lie. It's the actual chart. So follow the charts, see what it's saying, see what it's speaking to you. That's how you make the trades in this market. Okay, what's showing strength is what you want to be in. What's showing weakness is not what you want to be in. As I said, there's still upside, downside, and different surprises either way. So hopefully it's going to be a great trading week. I'm pretty excited. So keep an eye on those names. As I said, if you have a pen and paper right now, as I imagine many of you do, here are the names all week I'm going to be focusing on. UPS, Coca-Cola, Google, Spotify, Meta, Intel, and Amazon, right? Those are just the names you want to be watching, and Apple, of course. The ones I want to be playing are UPS, Meta, Spotify, and potentially Google. And those are my names that I think, for me, I have a little bit of a competitive advantage when I'm reading those charts, okay? Hopefully it's helpful to see all this. As I said, from the other side, if you're a short or a bear, we could fall off a cliff. If all these mega techs come out and they warnings out of the galore, everyone's missing EPS, then we capitulate. Bam, we go right to 340, right to 330 on the SPY. Then it's an easy day to trade. Then you just short and it's, you close your eyes and everyone wins. But guess what? I don't think it's going to be like that. I think it's going to be choppy. I think some days it's going to be down 5-7%. I think some days it's going to be up 10%. So I think it's going to be just a volatile, choppy market week. And I think it's going to be down to the specific names themselves. And the indexes will be very choppy this week unless everyone just magically beats. And no one's expecting that. So if that does happen, watch out above because we could get nasty on some short squeezes. So yeah, that's how I'm going to be looking to play the market, guys. I hope this lesson was helpful in terms of price action. And those are the gaps and levels you want to be targeting. As a trader, before you enter or exit a trade, this is what I'm always saying to myself. Where do I want to get in? Where do I want to get out? And then how do I make money in between, right? And so that's why levels are so important, because if you're just buying at a random time, like, you have no plan, you have no thesis, you don't know anything what's going on in that trade. If you yourself hit the buy or sell button and don't have a plan on that trade, it's not a good trade. You need to have a plan before you enter or exit or short or buy anything. And so that comes down to my 3-step rule of how do you make a trade, right? Is there liquidity? Check mark. Is there range percentage on the trade? Basically meaning, is the stock moving in a large direction up or down? That's what I'm a trader. I look for that. What's a stock up 5, 10, 15% on the day? What's moving with range? Is option contracts moving? Is there a lot of volume in the option contract world? Is a large cap getting a lot of volume that day? Is a large cap getting a lot of range? Range percentage, you always hear me talking about it. You don't want a stock that's moving like basically, half a percentage up and down on the day. Something that's moving 4, 5, 10%. That's what you want to be in because that provides the most opportunity. Volatility is your best friend as a trader, right? So that's the second check mark, right? Range percentage. First check mark was liquidity. And the third is demand and supply zones. Where the supports are, where the resistances are, and how you use those to your advantage, right? If there's a huge resistance coming up in the stock and you added it last week and it's on a great run, that's where you want to be scaling out as a trader, not scaling in, right? You want to be selling the FOMO, right? Buying the fear. It's very typical. You'll hear Warren Buffett say that over, decades over decades. Buying the fear, selling the FOMO. So, that's a very easy trading analogy. And that's how I think the market we're sort of in now. Until we get further direction on the Fed, until we get further direction on earnings this week. So hopefully this session was helpful, guys. I just wanted to talk. It's a little different than the past couple sessions because we kind of went through like levels. We don't typically go through levels, but I wanted to walk through the levels for all the earning reports coming up, because I think that's where it clicks, right? Like a company reports earnings, right? Let's say Meta or Google, and you see the stock immediately knee up or knee down. And then you immediately go, okay, we had the YouTube session with Spud. We went through all these resistances, supports. If XYZ company beats, here are these targets that it can hit if we go upside. So then you'll have them in your head. This is all about preparing and studying. You're beating out 90 to 95% of the world just by having this study session today, because you're understanding where stocks potentially can go up or down. And it's all about levels. You'll hear there's a guy on, you'll hear one of the guys on New York Stock Exchange. If you don't follow him on Instagram, Einstein of Wall Street. He always talks about technical analysis. Technical analysis runs the stock market. And if you can read technical analysis well, you can be an awesome trader. So hopefully this really helps, guys. And this is all I trade on for the most part, obviously, in terms of momentum or, shorting, etc. Or long, whatever it may be, whatever the trade setup may be. But hopefully this was a helpful session. I can maybe answer a couple quick questions. I know we sort of did about 35 minutes there, or actually almost 40 there, 40 minutes. I could do like 4 minutes of Q&A if you guys have a couple questions on the sidebar. If not, we usually do Q&A on the past few sessions, so I highly recommend checking out the past few videos. If you guys can throw a like or a comment on this page, that would be great. Marketing would very much appreciate it. As well as if you guys want to see some of the real-time trades within the Discord, or I do a lot of all-day analysis is what I'm seeing on the tapes and stuff, sell buy side, so you can see all that stuff. It's all within the Discord itself. It is a premium Discord. You can cancel anytime. You can check it out. Spud Zone Official. My tech team will post a link below. But if not, shoot some questions here, and let's go through some while we have a couple minutes. If you guys want to shoot over some questions, let's do that. Awesome, and I appreciate everyone coming on to join us. If there are no questions today, I know I didn't really prepare for a Q&A. We just won't have questions, and we'll jump to next week's session. But hopefully this was a really helpful session. MMTLP, yeah, I like that one. I think that's a link to Discord's above. It's at Spud Zone Discord. It's just Spud Zone Discord. Tech team, if you guys could post the Spud Zone link, that'd be great. There it is there. Awesome. Yeah, so MMTLP is an interesting chart one. Let me quickly pull that up. I think that's the old TRCH, that one that like MMAT that squeezed heavily, I think 2 years ago. MMTLP. This is the, I think, preferred share. I've been hearing a lot of things on this one that shares need to be covered here. It's going private. There's some like oil, gas, minefield or something tied to this sale or something like that. It's a speculative one. It's low volume the last 5 days, but the first couple days were pretty heavy volume hitter days. And since then, it's been sort of quiet. And everyone's sort of calling for a massive short squeeze on this name. MMTLP, it's OT, so you can't really buy it on some brokerages, but it's tied to this other ticker, MMAT. So I would probably keep an eye on the MMTLP because it's the preferred shares. But yeah, it's not something I'm going to be just like closing my eyes and holding. I think I'd probably want to be scalping or one day swinging this. As I said, it's speculative, so who knows? I'm not too familiar with the backstory, but I've been hearing people tell me what's going on with some of this. It does have a really nice chart. So if you look at the daily chart on MAT, it's like a big up, sort of sell off, consolidate, and then we have a wedge. I call this like a wedge. If this is strong, it's going to go retest that 751. And if it's really strong, it's going to break above the 751 and maybe go 8, 9, 10s. So keep an eye on this name. It could have maybe 100% upside if this chart trend continues. That was a good question, whoever had that one. Cool. Gilby Tableson, what do you think of your trading plan if you started with a small account like 3,000? I've started with small accounts. I've done 15,000 to 2 million. I've done small accounts and I know how they work. It's really tricky because it's really tough to get to that 25,000 trade mark where you can trade full time, sort of risk off in terms of you can sort of day trade as many times as you want instead of the 3-day rule a week. A little trick to starting with the small accounts, guys, is you could actually open multiple brokerages. You could do like $1,000 in each brokerage and you could get those 3 trades per each brokerage a week or whatever it may be on a cash account. I don't know the rules now. I think that's pretty much what you can do. I know you could do that back a couple years ago. That's how a lot of folks started. And therefore you can sort of basically day trade in your own little accounts and build up capital on all the small accounts. But if you obviously have only one brokerage, which is very normal and most people do that, you have to be using sort of X percentage of your cash, right? So if you have 3,000, maybe you're using $500 a trade on an option or $200 a trade on an option. Or maybe it's a small cap and you're putting in, $1,000, you're making 10, 20%, you make it 100, 200 bucks. Now you're at 3,200, right? So it's all about sort of that risk management with a small account. And it's so much easier to blow a small account just because of the higher probability of it closer being to zero, right? So it's tough to trade on a small account, but it's all about base hits, and that's on any size account. How do you get your 5, 10, 15, 20% base hits, and how do you build that up into compounding gains over time? And so, that's really how I'd look at a small account. It's all about base hits. Unfortunately, a lot of people with small accounts, 1, 2, 3, 4, 5K, they all just think, oh my God, how do I turn this into 100? And the reality is 1 out of 10 million people will be able to turn that into 100 grand like very quickly. And so the reality is that compound small wins add up. It takes people sometimes a year or two to get that 2K to 25K. But once you're at that 25K, you get to 30, 40, 50. You can really, really set a nice path for yourself in terms of being a great trader. So I would just stick to the small base hits and sort of managing your risk. Thanks, Spud. You're the man. No problem. No problem. Leslie Armstrong. Thanks, Spud. The levels on your analysis are indispensable. Looking forward to next week. Yes, Leslie, should be a crazy volatile week. Stay with us. It'll be fun. Steve S., where do you think Netflix is going this week? As I said, Netflix sort of gave me that mindset that maybe Spotify or Meta or some of these bigger names can have upside surprise. Netflix popped 25% in the span of 5 to 7 trading sessions. So that was an unbelievable move for upside calls. So if you had multi-week calls, those things paid. So I think Netflix now, you're going to have a ton of analysts coming and upbeating and putting out higher price targets, and I just don't think it falls too much further. I actually think Netflix is a pretty good buy if you get a 5-10% discount on it, but I think that name potentially could go another 5-10% higher on Netflix. We'll see if the chart shows. Chris Parker, how do you learn where to get you are? How did you learn to get to where you are? Honestly, a ton of mistakes, a ton of learning experiences over the past few years. A ton of studying, following charts, understanding charts, feeling price action. Price action is really everything. So how do you read a tape? Like, can you feel the selling? Can you look at the monitor and feel the selling? Or can you feel the buying that's happening on a 5-minute, 10-minute, 15-minute candlestick chart? And, when you get repetitive sort of lessons in the market, just by studying and reading, you get a sense of where something may go. And you can then educately predict where something may go. And that's sort of my experience, and that's basically how I've gotten to where I am today with, obviously blowing tons of accounts when I first started out trading, losing a ton, being emotional, almost quitting, and, just keeping fighting, keeping that positive energy and really learning, and then just going on a nice consistent roll over the last few years of just, nailing downside, upside trades. And, I kind of just keep that on the back burner and knowing that, any day you can fail at something, but you just got to continue fighting through and pushing yourself. So I would just say my advice would be just continue studying and pushing yourself and really, managing risk is a really big one as well. So hopefully that helps. Kenny Katie Anderson, I'm a member and it's worth it, guys. Appreciate that. Thanks, Kenny Katie, for being a loyal member. Appreciate that. Jasper Taylor, huge block trade for Twitter, 10.28.38 puts, maybe bad earnings or Twitter deal issues. Yeah, that's probably just big institutional money hedging the Twitter deal. You always see big prints like that if there's a big acquisition taking place and someone's in heavy on share side. Maybe they just take a block on the puts just to hedge, right? If it doesn't happen, at least they make some money on the downside. That's pretty normal. Glad everyone enjoyed the session. I'm out for now. But yeah, guys, let's have a great trading week. As I said, the tech team posted and pinned the link above to the channel. Let's go enjoy some football and have a wonderful trading week, guys. I'll be here to answer questions in the Discord. It's the Super Bowl of earnings this week, guys. So be on your toes. The indexes could get volatile. These names could get volatile. Up 2%, down 2% on the indexes a day we could be seeing. So just keep an eye because it's still very uncertain out there. VIX is still below 30, so keep an eye on the VIX. If we get above 30 again, things could get a little chop. That's an algo indicator, so keep an eye on the VIX as well. And yeah, guys, let's trade well. Let's be patient and let's nail our trades and let's have another great week. I appreciate everyone coming on and have a wonderful rest of your day. And I'll see everyone tomorrow morning. Cheers, guys. Spud Zone out.